Hi everyone, welcome back to another episode of Charting Markets with Jeremy. For today, let's take a look at the Straits Times Index. After having a rather good run in the first 2 months of this year, it does look like we have started to see some pullback. But nonetheless, again, in terms of price action-wise, over the past few days, it does look like the STI is also showing some signs of a bottom. So let me just highlight some of the key points over here. So again, starting off from the longer term time frame chart on the weekly time frame, where each bar over here represents a week. You can see for the STI, pretty much, at least from a longer term perspective, it is still trading in a decent uptrend, forming a series of higher highs as well as higher lows. But more importantly is, if I were to bring your attention closer, you can see how the STI tends to react to the blue line, which is the 60-week moving average. The last time we actually retested the 60-week moving average, it was actually this period over here back in November as well as December of last year. And we did actually get some decent rebound as well as a bottom playing through at the 60-week moving average, which then eventually led towards a decent spike up in price. And this time around, you can see pretty much the Straits Times Index also rebounded almost perfectly just off the 60-week moving average over here this week, and then followed by the sharp rebound that we saw playing out over the past 2 days. So possibly again, as long as the 60-week moving average holds, then what it tells us is possibly the uptrend is ready to resume. And even on a price action perspective, on this week alone, even though the week has not ended yet, if we can actually get a close above, say, 3,240 points for the week, then this hammer reversal bar would actually be formed. And what this means is also then likelihood is this bottom will likely play out more convincingly with this hammer reversal bar. And we will likely see the uptrend resuming to the upside, and then after which possibly even seeing the STI retesting the 3,400 levels to even the 3,450 levels in the coming weeks. So that is what the weekly time frame is showing. And you can see over here, this particular hammer reversal bar is pretty similar to the one that we saw over here back in November of last year, which also then resulted in, again, like I mentioned, the rally back up into the next uptrend. So possibly that could be playing out this time around once again. And going back to the daily time frame to show you exactly what has been happening. So again, key point wise for the daily time frame, number one point is following this sharp sell off over here since mid-February. More importantly is the STI has actually retested this green dotted line, which is the 200-day moving average. But more importantly is again how price reacted to the 200-day moving average. We actually saw some decent rebound playing through as of Wednesday. And right now it does look like the market is turning back up into the uptrend based on price action. So if you were to look again back in the days, the STI actually reacted pretty nicely in relation to the 200-day moving average. And going all the way back since September of last year, you can see how the 200-day moving average has been acting as a floor for the STI in terms of propelling price back up into the uptrend. So we actually got multiple bounces over here back in September of last year, which then eventually led towards a bottom. And also similarly here back in November as well as December, where we saw 2 bounces of the 200-day moving average. So it is no surprise that this time around this sharp sell-off was once again halted somewhere near the 200-day moving average. And in terms of specific level, it's actually somewhere near this static support as well, at around 3,160 points. So all in all, I think right now for the STI, it does look like right now the floor for the STI is around this level at 3,160, which is also where the 200-day moving average is. And in terms of price action wise, the sharp rebound that we saw on Wednesday, it's actually a rather significant one as well, where this rebound over here actually closed back above the 200-day moving average. And then henceforth, it actually formed what we call a bullish engulfing bar over here. So all in all, in terms of price action, as well as in terms of how price is reacting to this 200-day moving average, it does look like the STI has already formed a bottom here this week. And if that plays through, then likelihood is we'll see the uptrend eventually retake control to possibly retest the levels of 3,400 to around 3,450. So those will be the targets that we are watching out for the next leg back up higher. And just to highlight yet another positive point is the fact that this period of sell-off over the past 1 month or so has pretty much caused the relative strength index to actually fall into the oversold level. So when you look at the RSI, when you have anything that is below 30, it's usually telling us oversold kind of a condition. And for the STI, if you look historically, it does tend to give us a good indication in terms of finding a bottom whenever we have an RSI that is actually below 30. So I've actually plotted 2 examples over here. The more relevant one, which will be the one here, the most recent one back in November of last year. You can see the RSI fell to a low of around 21. And then after which we did get some rebound playing through after seeing this oversold signaling. And then you can see eventually the ST actually bottomed out, followed by a decent rally going all the way up to around the 3,400 region. So similarly, we also had a oversold signaling that led towards a bottom that happened back in October of 2020. You can see the moment the RSI fell to this oversold level of 29, once we started to see some rebound playing through from the price action side of things, that was when the mean reversion higher kick started, and then the STI pretty much just rallied to the upside at a pretty fast pace. So I guess this time around, we have almost a perfect condition happening. Firstly, in terms of price action wise, we have a strong price action showing up at this key support level, which is the 200-day moving average. And then at the same time, the oversold RSI signaling actually came out. So all in all, I think with this bullish price action over here, together with the oversold RSI right now turning back up to a more normalized level, it does look like we are probably entering into a mean reversion state back into the uptrend right now. And again, in terms of target-wise, this leg higher for the STI would likely see it retesting this 3,400 levels to even the 3,450 levels that were set back in February of last month. So that would be the outlook that we have for the STI, looking at this recent rebound. And just to cover the downside again, like I mentioned, right now the floor for the STI would likely be around 3,160. However, if this floor breaks and if we were to see further form of weakness playing through, the next level to actually watch for a rebound is at around 3,050 points, which is also a key support level going back since May of 2021. Yep, I think that is all we have for today, and I will see you guys in the next one.